I'd like to talk about the way that agencies are responding to those threats and challenges as indicated by the performance audit report that we tabled last Tuesday. This report followed on a report that we did in 2012 that looked at fraud controls across 13 agencies. This one drilled in more deeply with 3 agencies. That's the broad definition of fraud, but fraud need not only be financial. Fraud can have non-financial aspects such as identity theft, inappropriate use of information, or falsifying qualifications. A couple of other things that surveys always tell us is that most agencies who respond to fraud surveys say, yes, it's horrible out there, it's high risk, but it won't happen to us. One of the other things that surveys tell us is that the public sector is more prone to fraud than the private sector. That might be because there's a perception that the public sector doesn't respond as strongly when fraud is detected as the private sector. And the other thing that surveys tell us is that most fraud is detected by chance or by accident. 2/3 of fraud is identified by whistleblowers or by informants indicating that something's amiss. Only about 1/4 of fraud is detected by agencies' internal control. So that's the risk that we face. And Andrew already mentioned the challenges that agencies are facing with the loss of the 14,000 positions in the public service. First of all, that may give a lot of people the motivation or the incentive to commit fraud because of perceived loss of job security. And secondly, because most of these staff losses were back office staff, they weren't staff delivering services, that may have compromised agencies' controls. So the ability of agency to actually prevent, detect and respond to fraud might have been reduced by the machinery of government changes. Now, what did our fraud performance audit actually find? In conducting the audit, we didn't actually find any fraud. We didn't observe any instances of fraud. But what we did see, we saw a lot of top-level commitment to fraud awareness, to fraud prevention, to establishing a culture that is resistant to fraud. And we saw that a lot of employees were aware of that agency's commitment. But we did see some uncertainty about who's actually responsible for fraud at middle-level management. We saw a lot of policies, plans and procedures, but we didn't see training and in fraud awareness that was specific to fraud and not just general misconduct training. We didn't see a lot of training that was relevant to employees' situations. What's the sort of fraud that I might actually see in my position in this organisation? And we didn't see a lot of training that reflected the broader definitions, the non-financial aspects of fraud. We didn't see a lot of proactive prevention and detection. 2 of the things that we wanted to see in agencies, and when I show the chart again that Mark showed, you'll see 2 of the things are fraud risk assessments, which can help you prevent fraud by identifying high-risk areas, and data analytics to analyse your data sets and find out if there are any anomalous transactions that might show that there's something is amiss that you need to look at. We didn't see much of fraud risk assessments or use of data analytics. What this means is that the risk of fraud occurring remains unacceptably high, and the risk of fraud being undetected is unacceptably high as well. This is the chart that this shows the 15 better practice criteria that we used. There's 2 for response, 2 for detection, and the rest are for prevention. And the things to look out for are the weakest areas here: fraud and corruption awareness, fraud risk assessment, line manager responsibility, and fraud detection programs, which is the use of data analytics. So this is an overall rating of the 3 agencies that participated, and the weak areas line up with the 4 weaknesses that we saw in the way agencies manage their fraud controls. We recommended that agencies conduct their own internal self-assessment of their fraud controls. Well, one way of doing this is by using those 15 better practice criteria, and in the appendix of the report we've got a self-assessment guide to assist agencies to do that. We've also got sources of better practice that agencies could, that people could look at to find out what better practice is and how they can embed it in their agency. But as the Auditor-General said, fraud risk controls have to be balanced. We don't want to have tighter and tighter controls with higher and higher cost, as Mark showed, that introduce more red tape to an agency. So a lot of the art of managing your fraud controls is to ensure that they're balanced.